Good morning, good afternoon, good evening, and welcome, depending where you are on the planet, and welcome to today's Thursday, the 15th of September, Bull versus Bear webinar. Steve Miley on the call for trade day. Welcome, everyone. We're going to go through our usual run through in here today. Calendar, what we've had, what we've got coming up, macroeconomic fundamental articles from the major news wires and charts. Just a couple of points of housekeeping before we start. First, I'm going to make this a very brief webinar, I'm afraid. So one reason is just a time commitment I have, but secondly, there is actually not much going on. I know we had a huge move in markets 2 days ago. Yesterday was very much a bit of a damp squib, and things not really moving in either direction for most financial markets. Oil was a little busy, but elsewhere things were fairly quiet. Very narrow ranges, and also the overnight news. Fundamentally, markets have hardly moved. So I will run through what the various areas that we usually run through, but it will be a fairly brief webinar. I'm probably going to keep it to 10 minutes, maybe up to 15. And then the other thing to note is tomorrow. And on Monday. So tomorrow's webinar, you have to keep an eye on the activity feed, guys. The chat, this chat and site activity, you can get to it here, and in the forums as well over here. Okay. If you go to the chat and site activity and the forums, we'll update you whether they're going to be on tomorrow and Monday. I mean, there will be definitely one on one of those 2 days, but almost certainly there'll be one of those days there won't be a webinar. Monday is a UK holiday. We have the funeral of the Queen here, so I will likely be unavailable for the UK holiday then on Monday. James may or may not be covering that one, and then tomorrow I have a commitment, so James will certainly be covering one of those on either Friday or Monday, but we may also have a gap. Okay, so just keep an eye on the chat and site activity over here. You know where that is. I'm not going to click away to it now because it will take me to the homepage, and the homepage has got me talking on it at the moment, and we'll get a feedback loop. So chat and site activity, and on the forums, and also on the scrolling on the dashboard, you get the scrolling up the news update in there. So keep an eye on those for when the webinars will be Friday and Monday, whether we have a postponement on one of those days. Because I don't want you guys who get up early to watch the webinar getting up early if it's not going to be on. So please do keep an eye on those over the next 12 hours, and we'll give you an update on whether tomorrow is on or off. So yeah, let's just run through there. But there's very little. I mean, you can see how little there is going on, because if you go for 5 things you need to know to start your day in here, there's really, they're kind of scraping the barrel. There's no real news in here at all that's going to impact us, right? Exodus of residents is shrinking Hong Kong's workforce, gets at the top, people leaving Hong Kong. Talking about the spending in Japan on the combination of Russia, Ukraine, Taiwan, China, Taiwan, North Korea, nuclear missiles. Japan having a big increase in defense spending. It's the biggest increase since World War II. But again, nothing we're interested in. China's stocks listed in the US surged by almost in 2 months as a country is talking about avoided delisting on the New York Stock Exchange. Again, nothing that's going to impact us. Talking about boosting troops, Putin looking to boost troops. Again, and nothing really. And climate risk. I don't even know whether I'm picking up the wrong. No, I think this is the right one. I think this is the Asia one. This is why it's the Asia one. But if you go and look for the 5 things, there isn't a 5 things for today on Bloomberg. I did get one for Europe this morning. There wasn't much more in the European one. There really isn't much. And you go through the headlines in here from Bloomberg and from Reuters. There's nothing really much. Obviously, yesterday we did eke out some gains yesterday on the close, but small gains compared to Tuesday's free fall, to Tuesday's plunge. And overnight in here, futures kind of wavering in here. So market kind of just sitting and waiting in here. Let's actually wind back and look at the calendar. So today's calendar, we've had some light data out of Europe in this morning. CPI data from France in here, higher than expected, which is obviously a negative. And then the big focus really today is going to be on retail sales that we have in just under an hour. So that's an important set of data. Certainly keeping an eye on that. Is the consumer still going strong? So we're certainly watching that. A little later, we get industrial production as well. And so maybe watching that. That's at 9:15 Eastern, and business inventories at 10. These are not big movers usually in the market, but we're watching those. Overnight, we get industrial, some in Chinese data in here, industrial production. But really, the retail sales number in just under 1 hour is going to be the key focus going into the day. And markets just kind of sitting waiting. I'm going to share this article. I haven't fully read it yet. I kind of skip read it earlier. I'm going to read it. I've bookmarked it to read it. And yeah, this is going to be interesting. You talk about where are mutual interest rates and where are they for the Fed, and do the Fed know where they are in this era we're in now? So this is an interesting article. It's not going to make you any money straight away, right here, right now, but I think it's interesting. It's good to get up to speed with some of this stuff and have an understanding. So I would certainly suggest looking at that. The Ethereum merge has finished. It's gone through. Seemed to go all fine. Market hasn't really moved. If anything, was a slight dip on cryptocurrencies, but markets are kind of very flat in the crypto side. It's Ether not really moving too much, but we have had if you want to get up to speed, there's a little explainer article in here on the Ethereum merge, but it's kind of been a come and gone now. Hasn't really impacted the crypto market, not impacting our markets. European markets are kind of mixed in here, but the FTSE 100, the UK market is higher. Banks and miners rebounding in here this morning. And if we go and take a look where we are, so look, European bourses in here are pretty much unchanged. So European exchanges sitting at pretty much flat on the days. I say FTSE is slightly higher in here, up 0.25%, but mostly mixed in here, slightly up, slightly down. German index is pretty much flat, down 1/10. And if we look at the overnight in here, so we did get a slight rebound in here, but it was a slight rebound. Dow was up 1/10, S&P up 1/3, and we're kind of flat in here going into the day. Nasdaq's actually back down 1/3 in here this morning, 1/3%. But pretty much kind of coming in fairly flat in here, slightly lower, 1/10 to 2/10 down on the futures for the Dow and the S&P. So very quiet in here. This is actually kind of moved back higher in here. So we did have, this was a little bit higher yesterday, I think. But this is, basically we're nailed on now for a 75 basis point hike, but with an outside chance of a full 1 point hike. I really don't see the full 1 point happening. I really don't see the Fed are going to knee jerk to that. But who knows? Let's go take a look at the charts then. Very little to add to yesterday, really. We did get a slight rebound. We said, to watch the levels. We looked at that little counter trend line. I know Clinton noted that kind of worked yesterday. We kind of got above. There was that little down counter trend line. The market kind of popped above that, and then it was choppy on the open in here. Lower and higher. But really caught in a range, right? We have gone lower, overnight, but you're kind of caught in a range in here. And the market's dipped and rebounded again in here over the last hour or so. So markets, just kind of caught. This is very much what we call a dead cat bounce. Why is it a dead cat bounce? Because dead cats don't bounce, right? Just wavering in here, backwards and forwards. I mean, no real strong view in here. It's going to get rid of some of this also. But I mean, the main thing I would point out in here is that we're still below that. Here's the 23.6% retracement of just the sell-off. This is the CPI sell-off. We're not even back at the 23.6 from a Fibonacci perspective. A Fibonacci retracement perspective, that's the very first level you need to overcome. But I think you're playing this binary again. The market's repeatedly failed now in this like 1377 to 1380 kind of area. Okay, you've had 1, 2, 3, 4, 5, 6, 7 failures in here. Some of them in active markets, a couple of times in active markets, a few other times overnight in here. If it clears that area, then we'll probably be quickly up to this 23.6, and then this little swing up here, which is around 4,016. Okay, the 23.6% retracement is 39.94. So above that area there, back down through the lows in here, you probably see it significantly lower. So, but it's probably all going to be on retail sales. Retail sales are going to be probably the next mini driver in here for where we go. So just watching that, and it's the same story for the Nasdaq. Kind of Nasdaq, a bit of a dead cat bounce. Slightly better from the Nasdaq, maybe you could argue, coming right off this trend line in here, this redrawn trend line. It's off this low. It's not the best trend line. Much better trend line that one on the S&P. This one in here, but the market continues to flirt with that trend line. If we go in on the Nasdaq in here, this is too far in. Let's 5 minutes. Go to the 15-minute, but it's the same thing. Look, wavering, consolidating. You have actually. You could argue with the Nasdaq, it looks a little bit better on the chart in here. For the Nasdaq, you've got more like higher. You didn't actually make new lows in here, just dipped in here, just dipped below here. below the low in here. But it's held multiple times in here now. We've held 1, 2, 3, 4, 5, 6 times now in the 12 kind of 80 to kind of 1290 to 12,090, 12,080 area, and rebound again here. I mean, for me, I am a bit of the internal bull, but I think there's slight bias to the upside today. In my reports today, I'm still saying lower, right? Because it's a dead cat bounce still. But you know what? If it starts to take out the peaks in here, if it starts to take out this 23.6% retracement, that's at 12,295. That swing high there, 12,337 kind of area. If it starts to take out this resistance here, then it looks like more to the upside. As I have time, we can move through fairly quickly because there's very little going on going into today. Let's just have a nod to the rest of the markets. So treasuries keep going lower. So this is lower in price, remember, higher in yields, okay? Lower again. Obviously, you'll see, and initially you'll see, I was like, well, it didn't make a really big move, but continued lower yesterday. Lower again in price. And if we go and take a look at the yield chart then, in here, put it on a candlestick chart in here, and you can see on the yield chart, we're eking back up to the high yields from over here from June, okay, on the 10-year note, okay. So, that's a real concern. If we break above the peaks in here, so they're at like 350 on 10 years, above 350 would be quite a big statement, okay. So watching out for that. If that goes up to here, we get higher yield pressures, then, it's probably going to put a negative impact. We have continued to push to, high yield. So we obviously had the explosion. We did get, not explosion, it was a significant move to higher yields on the CPI data, then a slight dip, more of a consolidation, and we're moving back higher. So as we move back higher in yields right now, and we're kind of, if we close right where we are now in yields, 345, that's a high yield close for this whole move. So, even with this higher yield move, equities are not really reacting negatively to it at the moment. But I think if we did break above 350, then you will probably see a negative reaction from the equity markets. Let's go and take a look at just, because we kind of skipped them yesterday, the dollar in here, the surge back higher, obviously, after the CPI data, again, like high level consolidation, the opposite to a dead cat bounce, dipping a rebound yesterday. We're kind of hesitant in here today, and if we just step in here to like a 15-minute chart, you can see some hesitancy in here on the 15-minute chart. Hesitant to push back up higher in here. So, if dollar starts to drift back lower in here, it could be a sign. So you're watching that as well. Some positivity coming through for the equity markets. And then let's go and take a look at gold and oil. So gold in here pushing lower, dollar not making new gains in here, but the gold in here breaking not only below these recent lows, but also below this low from over here from July. So that's a significant move on gold. Gold looking very negative in there, I must say, and I still really think there's downside for gold. Let's take a look at oil in here on the daily chart. So we got that kind of rebound. It's very erratic through the CPI number. We got a rebound yesterday and then back lower today. It's kind of, mixed in here. I've got no real strong. I do feel, it's kind of trying to put a base in here. Slight upside bias after yesterday's price action, but the market did fail below this peak over here on oil, which comes back from when was this? 9th September, is that? Yeah. Sorry, 5th September, excuse me. So the peak over here was 90.38. So we just fouled from below there and dipping back lower. But we're holding these lows in here, which come at 86.40, 86.15 kind of area, and holding there. So kind of a bit of no man's land for oil at the moment. Hold a gun to my head, slightly positive on oil, and probably positive with the potential push higher in stocks. But no strong view there. I think again, the aftermath. There's been no real aftermath post CPI. So we've had the inflation data, obviously very negative, go into a big risk-off move, and then you haven't had either a retracement of that, and start to indicate, okay, we're going to start to retrace that, or you haven't had an indication of continuation. And markets are really in a wait-and-see mode. I don't think they're going to be in this wait-and-see mode right the way through to the Fed next week. So what we'll probably see is, maybe a spur coming from either maybe retail sales today. So certainly keeping an eye on retail sales to maybe see where we're going to get the next leg of the move. Continuation of CPI risk off, or are we going to get a correction of that risk off move? And I say I've got no strong view on that. Say hold a gun to my head. Slight risk on view, very, very, slight risk on view maybe going into today. So bullish equities, negative dollar, maybe bullish oil. But you need to have the breaks above the levels, on the resistance levels, and we're not getting those at the moment. Until we get those, I think you sit on your hands, you wait and see, you wait for the opportunities. All right, guys, I'm going to wrap it up there. As promised a little earlier now, so a 15-minute webinar today. As I say, please keep an eye on the activity feed. May or may not be a webinar in here tomorrow and or Monday, but we will definitely be one across the 2 days, but they're probably almost certainly one of them is going to be cancelled. So I don't want you guys coming on. So keep an eye on the activity feed, the chat, and the forums, and we'll certainly announce it either way before tomorrow. All right, guys, have a good one. Stay safe, take care, and have a great trading day. Bye.